Good day to you, Travis. Today is the rare Saturday, March 28th update from me. I haven't checked in all week due to spring break. I hope you had a great spring break with your kids and with your family if you had time off. If it's spring break for you, if you're listening to this from around the United States, it may not be your spring break. But we had a good time here in Oregon, even though the weather's terrible. But yeah, that's not a shocker here. Interesting week with bonds, mortgage bonds, ever since the Fed announcement here over a week ago, last Wednesday, when they committed to spending over $1 trillion more in treasuries and mortgage bonds. It really has caused rates to stay low. And initially, the first day when they announced that rates went on quite the rally for the better, but the pricing really didn't come to us at our level. And then there was some erosion the next few days just because of the talk of inflation around the world and global interest in our mortgage bonds and our treasuries, just for the fact that we're simply printing so much money and so many treasury notes. But the Feds have stepped in several times this week and intervened. They had a 2-year treasury note auction, 5-year and 7-year throughout the week, nearly $100 billion in treasury notes that were auctioned. And the foreign interest and domestic interest really wasn't that high, but the Fed stepped in and started buying hand over fist of money, billions of dollars worth of treasuries, and once they started buying, then everybody else started buying on the treasury level. So it caused mortgage bonds and treasuries to have a good week. There was some profit taking here on Friday at market close, as well as in stocks. There was a little bit of sell-off going on there as well to take some profit from the rare opportunity we've seen take profit lately. Some of these things are affecting other areas of our economy. The good news is the PCE, or Personal Consumption Expenditure Index, came out on Friday. That's the core number the Feds look at to make sure inflation is not spiraling out of control, which it hasn't yet. And this number, or this reading that came out, was positive that it still is under control. But there are some things that are factored into that as well, as far as personal income going down. What people are getting paid is dropping still, as well as jobless claims that continue to go forward are going out. So this coming Friday, next Friday, some big numbers coming out again with the unemployment numbers, the new unemployment rate, as well as the jobless claims. And so it should be interesting to see how that comes out this week, how that affects stocks and bonds. But right now, I mean, mortgage rates are incredibly low. This isn't a sales pitch. It's amazing to see how low rates are. I've had some pretty conservative financial planners I work with on my wealth management team finally pull the trigger this last week, just simply because rates are unbelievably low. And every deal I seem to look at these days, it would just really be hard not for it to pencil over time, over at least it could be 6 months in some cases. For some people, I did a consultation today, their rate was 7.5, and they say $490 just on a small $180,000 loan. So I would definitely look at it at your rate and make sure that you are in a range that you may want to refinance right now. I can't think of a reason why you wouldn't if you have equity in your home. The other good news is if you don't have the equity in your home and you're having trouble refinancing right now into a lower rate because of issues like the home value dropping, that DU Refi Plus program will be out and should be able to run through, at least through the DU, the Desktop Underwriter, which is the Fannie Mae's underwriting system. That was supposed to be updated and ready to go by next Friday, April 3rd or 4th. So hopefully that really is the case. The other great news is that there's truly the investor interest may happen, because Wells Fargo sent out a notice last week to us as brokers that they will be carrying that program and will be supporting the Fannie Mae DU Refi Plus program. So that was my concern. That was that Fannie Mae was going to offer it. The Feds pumped it in the media, but then no investor would carry it. But if Wells Fargo, as conservative as they are covering that type of mortgage, then I think most other companies will follow in suit, as well as Countrywide, soon to be Bank of America. As we all know, Bank of America purchased Countrywide several months ago, but the big name change and so on will take place here in the coming week. So you'll no longer see Countrywide on your mortgage statements. You'll be seeing Bank of America here sooner than later. Other than that, I just want to make sure that you, as my friends and consumers, that you check, if you're not working with me, to make sure that when you do get approached, most of my clients are getting called right now by their loan servicer. So if you want to have a loan with Countrywide or Chase right now, most likely you've already received a call or the numerous flyers or letters in the mail to entice you to refinance right now, which every reason in the world to refinance right now in most cases. But the problem is I'm having a lot of clients get excited about a low rate. Let's say they're going from 6.25 right now, and they get a phone call from Countrywide offering 5%. Well, that's a heck of a drop and a heck of a payment savings, but the reality is that's not quite low enough. And so don't get too excited about a lower rate. Make sure that you are truly getting the lowest rate, because I've never seen such a variance in difference between lenders and investors right now in their pricing. Meaning, at our bank, if I could lock someone at 4.75, I may look at a Wells Fargo pricing sheet on the retail side of things, and maybe 5.25, a whole 0.5% difference on the same type of loan, simply because of capacity issues again, like I've talked about, because of not having enough money on their credit line or not having enough staff to even push through these loans. So it's important to really do some background on your refinance to make sure that you're working with someone that is a professional, that is giving you truly the best rate out there that's out there on the market, considering fees and everything else associated with it. So I just really encourage you to take the time necessary. You're not buying a CD player on eBay. This is an important process, so please treat it that way. Other than that, rates are awesome. Like I said, it's amazing to have clients closing at 4.75 and up and down from that, depending on what the fee structure is and what their goals are. But it's an amazing time right now. Cheap money, and hopefully you're taking advantage of it. Give us a call if you have any questions. We look forward to serving you. Have a great Saturday and be blessed.